Hello, my name is Mushtaba. I'm a Forex Optimum broker financial analyst. US stock index closed positive last Friday, turning upside in the last trading hours after hovering in the red zone in the beginning of the day. The negative sentiment on Friday morning was sparked by the absence of the progress in the database over the next stimulus package, worth over $1 trillion. Rising in new infections cases in the United States, disappointing microeconomic data, and energy companies' reports. However, outstanding reports by tech giants Apple, Amazon, and Facebook allowed to reverse the negative trend. The S&P 500 index gained 0.77% to the 3217 point. World Stock Index started this week in a positive way, but investors are still keeping in mind the second wave of the pandemic, microeconomic statistics, and continuous database over the new stimulus package in the US. Recorded new COVID-19 cases in the US are declining, but the restrictive measures are allowed down the economic recovery. Democrats and Republicans are still far from the agreement over stimulus package to support stalling economy. Investors are taking a close look at the US-China tension after US Secretary of State Mike Pompeo said Donald Trump may take action on the Chinese software firm, including TikTok social media network in the coming days due to threat to the national security. Despite all the negative, S&P 500 broad market index continues to climb and is on the halfway to close a March gap. Technical target is the regard remain the same, renewing the all-time high of 3393.52 point. Gold is looking good on this background, consolidating close to the all-time highs. That provides an idea of technical correction in form of sideways movements rather than a wave of decline. Nevertheless, technical targets of $2,000 per troy ounce remains intact. Yields of the U.S. Treasury remains low. The benchmark 10-year treasuries are traded with a yield below 0.75%. Oil market is hovering around without any attempt to gain over the weakened U.S. dollar that was lasting for several weeks. This may be considered as bad news for the market. Brent crude may take a steep slide, ignoring all positive factors when risk overtake current positive sentiment. Huge oil reserves are preventing oil prices from any possible upside turn. Fresh weekly data showed the decline of oil reserves in the United States by 10.6 million barrels that is common for summer driving season. However, oil reserves accumulated over the pandemic worldwide economy shutdown are by 20.5% above the 2019 level. On the other hand, crude production in the US is almost the same level than a year ago at 11.1 million barrels per day. OPEC Plus and its allies crude production at 90% of the level of 2019. Saudi Arabia and Russia limited their output even more with a decline of more than 20% of the levels of March peaks. It's worth to be noted that OPEC Plus is set to gradually lift production cuts and increase oil output. Another season of the OPEC Plus is scheduled for August 18. The decision of the cartel and its allies on this meeting is not clear yet, and this is the major constraining factor for the market. Worsening pandemic situation worldwide, including in the United States, is also among negative factors affecting crude prices. Brent crude prices are seen consolidating within the range of $41–45 per barrel this week. Any significant movement are expected in the second half of the month after OPEC Plus decision and after the scale of the new wave of the pandemic will be more or less clear. Stalling in a narrow range of $41 to $45 per barrel despite a positive factor that were simply ignored. A decline of oil prices on Thursday was promoted by rising numbers of coronavirus infections that may threaten recovery of global demand for crude. The data from Energy Information Administration that was published on Wednesday showed a sharp decline in oil reserve in the United States. Oil reserves plunged by 10.61 million barrels, well beyond analysts' expectations of the plus of 0.36 million barrels. Such a trend may indicate that the demand for crude is on the gradual recovery track. However, this data was ignored. OPEC and its allies are expected to add around 1.5 million barrels per day starting August 1st. Crude prices are under many controversial factors. Those prices could continue to consolidate within the current range. We should not exclude a trend formation closer to the OPEC meeting. Plus, weak global growth representative pressure oil prices, US-China tension are adding to this pressure as well as the new pandemic spread worldwide. China has ordered to close U.S. consulate in Chengdu in a mirror response to the U.S. demand to close Chinese consulate in Houston. Considering the intense negative background, crude prices may remain under pressure. Technical picture suggests Brent crude will continue to consolidate in the area of $42 to $44 per barrel.